Okay, folks, today's question, are you dumb money? A, we're going to answer that question. B, we're going to tell you what dumb money is and why they call us that. But first, let's pay the bills. Folks, our sponsor tonight is going to be TrendSpider. TrendSpider is the future of trading software. It says it right here on their website. Right there. All right, in all seriousness. TrendSpider is next level stuff. I'm going to use it tonight. I'm going to do a demonstration using their charting software, and I'm going to use two different type of candlesticks. One is candlestick. The other is a takeoff on a candlestick. It's called a raindrop chart, and it's a mixture of candlestick charting and VWAP, volume weighted moving averages, and it really helps you to identify the health of each individual candlestick. So what I would like for you to do is, if you are ready to join TrendSpider, head over here to their pricing page. Wherever you're watching this, click the link below. It'll take you over to TrendSpider. Use discount code CT25Z. That's a discount I get for you. Again, CT25Z. And if you're interested in becoming a member of the Contrarian Trader, which I would really appreciate, and John and Henry, thanks for joining today. Please say hello in the forum, please. If you are interested in joining the Contrarian Trader, head over to my pricing page and join up. And guess what? TrendSpider is included with our silver and gold level memberships. That's right. Get it for free when you sign up. Yearly members get a discount. You're paying a couple of bucks a day to have an edge over other traders, folks. You're getting TrendSpider and you're getting me. A really great value. Let's get to the charts. All right, so let's kick off the conversation of what is dumb money and whether or not you are dumb money with the definition out of Investopedia. We'll keep it simple. Dumb money versus smart money. The average individual investor who trade money are often shoved under the dumb money umbrella. If you fall into this category, try not to take offense. Folks, take offense. Please, get really, really mad and take offense. You should. The terms dumb money and smart money were coined by the financial media. Really. The people who are paid to give you the news about the financial news media, which is force-fed them to tell you, have coined you the dumb money, but they want you to buy from their advertisers. What's wrong with this picture? What is wrong with this picture? It's not to insult anyone's intelligence, but to describe different groups of investors. Please. It is meant to take you and put you into a bucket. And in that bucket, you will sit until you learn how to get out of that bucket. And what will you do while you're in that bucket? You will be the target of advertisements from the financial news media, both on print, web, and TV. And you will also be the target for the Wall Street hucksters out there who are looking to take your money. They want to transfer your money from your pocket into their pockets where they believe that it belongs rightfully. And they have no qualms about it. They roll their eyes back white like a shark, and they take that money and they sleep perfectly at night. Don't think they feel bad. So when you wake up in the morning and you see the futures bright green, and you see the talking heads on TV smiling, they're bringing on their guests who are long-only fund managers. They can't short stocks. They need a bull market to make money, and they need to be invested all the time. So it's a conflict of interest that they have when they go on TV. So rather than coming on TV and giving you an honest opinion of how the economy is doing, what stocks should you really be buying? Maybe you should be buying commodities like we were last year, going into this year, 150% higher on NUGT, the shares that we came into the year with. Think about it, 150% return on the shares of NUGT. It's a gold mining leveraged ETF that all the talking heads say, stay away from gold. Nobody wants gold. Nobody wants the gold miners. Stay away from that. Buy Google, buy Facebook. I was saying sell that stuff. It's on YouTube. Go back, take a look at it. Search all my videos. I was saying sell YouTube, sell Facebook months ago, over a year ago now. And I was saying buy gold, buy silver. Now, gold and silver are up along with the gold miners. And what are Facebook and Google doing? Down. How did I know? How did I know? How I knew is that, and don't get me wrong, I was not always, and I'm not even going to call myself smart money. I was not always an educated investor. I spent a great deal of time, a lot of it in the late 1990s, being dumb money. I figured that the market could only go up. And believe me, back then, if you lost money, you were as dumb as a stump. You couldn't help but make money until March of 2000 when everything went bust. I digress. So what you need to do, folks, is that you need to learn the charts. And that's not enough, but I'll tell you the solution to the other half that you're missing. You need coaching, because this is a complicated global economy. And the charts are great. TrendSpider, they're a partner. I'm a certified partner of theirs. I'm a big fan, but you need this type of technology because it takes the emotion out of trading. I'm going to show you an example in a moment of how they pump the markets only to sell it off. And this has happened over the course of the past several trading days. I'm going to show you examples of it. So the question is, how do you avoid being dumb money? You need to learn the charts, folks. There's no two ways about it. You must learn how to read the charts. Let's bring up TrendSpider. All right, for the purposes of our conversation, I have the camera here and I have the monitor here, so forgive me if I'm not looking at you. For the purposes of our conversation, I'm going to use a 15-minute chart. I'm not a day trader. I'm a position trader with core positions, meaning I like to buy big concentrated positions that I think are going up for the long term, like silver, the gold miners, and I like to trade around those positions with short-term swing trade. I'm not a big day trader, all right? I'm not good at it. I just don't. I'm more analytical. I need time to digest what's going on. I'm not a high-speed type of guy. I'm simply not. So I know my strengths. I know my weaknesses. So I'm very, very good when it comes to swing trading for the short term and the long term. Not very good intraday. But for our purposes, I'm going to talk about how do you know you're being lied to in the morning when you wake up and you see the futures bright green. And I'll show you over the past several trading days what has happened. You wake up in the morning and the futures, you can go back to the 21st, and you'll see that we spiked up higher. All the talking heads on CNBC, Bloomberg, everybody's all excited. Everybody's bullish, you know, 2% growth here, China trade deal there, and all of a sudden you see a pump in the market. And it's all BS. It's all BS. It's all fluff. And all they want you to do is to get excited, right? Because it's all about emotion. They want to tap into your emotional pool. And that's why you need to learn the charts. Because if you learn to set alerts like you do with TrendSpider, like I right click, and if I want to buy at this support level, which I've drawn, I do this. Support, hit. I set it and forget it. I'm not going to think about that support level until my alert gets hit. I'm not going to sit here going, will it hit it now? Will it hit it now? That's what they want you to do. They want you to agonize over the chart. You need to use technology. They're using it. Traders in the big Wall Street houses are certainly using it. You need to use it as well. Now, getting back to the pump and dump action in the mornings, I just showed you on the 21st, they pumped the market. What did they do the next day? They pumped the market. They rallied it, sold it off hard. The next day, they dropped the market. Rumors came out. They bid it back up off the lows of the day. What happened later? It rolled back over again. This is not a market where you buy the opening bell. The last thing you want to do is buy that opening bell. But they'll never tell you that on CNBC. Never, ever. They want you to get all excited, go running into the market, give you the FOMO, fear of missing out. There's no such thing in my book. The stocks either come to me or I avoid. And that is the discipline. What matters most is not where a stock trades intraday. It doesn't matter where it opens. What matters is where it closes. Does it close at the highs of the day? Does it close at the lows of the day? Does it close above support? Did it close above support on volume? Because that'll dictate which direction the market is going to go. Now, let's bring up a chart of Google. I've been talking about Google quite a bit lately. I was going to keep this short, but you know what? I could talk about this all day long. Let's talk about Google. I spoke about it over the weekend, and I spoke about it as a short position. And I meant to do some raindrop charting here, and I'll do that now. So what you can do here with TrendSpider is change the grid and have your raindrop charts below and your candlesticks above, or you can flip them around like this, side by side. That's good as well, but I prefer my candlesticks over my raindrop charts. And what I want to do here is I want to take weekly overlays, and you can see my Google new weekly alert was triggered today. And no, we didn't go opening up a short position yet, but we will. So I'm going to delete this. I'm going to set a new alert. Okay. So even though we hit that weekly new low, we still bounced. So again, this is a perfect example of what I mean by it doesn't matter where a stock trades intraday, right? We hit a new weekly low, but we rallied off of that low to close positive on the day. So it's great that we made a new weekly low. In all probability, we're going to close the week out at the lows of the week. But that didn't mean, by virtue of the fact that we made a new weekly low, that you automatically go opening up a new short trade. You want to make sure that it closes at that new weekly low. Because in all probability, it's all about probabilities. In all probability, you're going to get a break to a new weekly low. Okay? So now you have the trend in your favor. I may be a contrarian, but that doesn't mean I don't appreciate the value of the trend. Where I really become a contrarian is where stocks become extremely overbought, like with RSI 90, or extremely oversold with RSI below 15, below 10 on stocks that are trading in the single digits. And that happens all the time. So in this case here, we didn't believe all the hype out of the financial news media that we were going to have a trade deal with China. We didn't believe that for a second. I don't think there's going to be a trade deal between now and the 2020 elections. I think that what's going to happen, if we do get a deal, it's going to be a horrible deal, and the market is going to sell off on that deal. So what we were looking at with the overlay, let's go to a individual's chart here. I overlaid, I'll take them off. This is a daily overlay of support and resistance, but I want to know on a higher level view where my support and resistance levels are on a daily chart, but on a weekly basis. Think about the power of that. So you're looking at your daily chart, and having these support and resistance levels are all good, but it can get a bit busy at times, right? I could take some of the insignificant ones off and clean it up a bit. I could do that. But what I would rather do is use my weekly overlay, take my daily trend lines off, and simply overlay my weekly. And now the picture becomes much, much different. You're dealing with far more significant support and resistance levels. And when they break, it becomes a very, very big deal. Like last week, we smashed through 2 support levels after a failure to hold this top one. So what Google is telling you, what the charts are telling you, is that Google is weak and getting weaker. But you're not going to hear that on CNBC. You're not going to hear an analyst go on CNBC and say, sell Google. Why? It's because they'll lose the investment banking business with Google. Why would they do that? They're making far too much money with Google to alienate them. So use the charts. And when it comes down to knowing the geopolitical risks out there, you need a guy like me. That's what I do. I live for it. I watch the global markets. We know what happens when the dollar gets stronger or weaker. We know what to buy. When the dollar gets weaker, we want to buy the gold miners, as we did last year when nobody else wanted them. But everybody wanted you to buy Google. And how would you have done if you bought it back in April? Let's go to a weekly chart here. Hell, let's go to a monthly chart. You would be nowhere. Nowhere. Over the past year. Nowhere. A lot of volatility. no real upside gains. And add to that, you have an RSI, which is putting in lower highs, negative divergence, right? Putting in higher highs, new all-time highs, but all the while, RSI was breaking down to new lower lows. The markets were sending you a signal, but you need to learn the charts, and you need a coach to help guide you through this geopolitical minefield. And it is. At any given time, we can have a black swan event. These markets are not looking good. Now, I want to talk to you a bit about raindrop charting as well. And raindrop charting is very interesting. Team TrendSpider educated me on it, and I have been adapting it more and more to my trading style. And you see these blue candlesticks. Those are signs of indecision. And there's a good possibility, not a probability, but there's a good possibility that you will see a reversal of the short-term trend because we're using a daily chart. So the trend we generally consider short-term. Now, case in point, back here on January the 9th, we failed to put in a new daily high. So we had been rallying since Christmas, and we paused, and we flashed a blue neutral bar. And that would have indicated to you, if you had raindrop charting, that there was a good possibility that we were going to get a pullback. And we did pull back to the 20-period moving averages, rallied, pulled back, more blue candlesticks, some indecision in here. We formed a W formation, but then we proceeded to press higher, and the 20-period moving average began to rise. And each time thereafter, after we hit the 20-period moving average, we began to trade higher yet again. Now, with Google most recently, you can go back here to the 16th of July, a blue neutral candlestick bar. We sold off. We gapped up higher a few days later, but up and through the third standard deviation Bollinger Band, pulled back, rallied. Now we flashed another blue neutral bar. And that would have indicated to you that we had a good possibility that we were going to get another lower high. And sure enough, that's what happened. We have been weakening ever since, and we are barely holding on. We're holding on by a thread with Google. Now, another way to use the raindrop candlesticks is right back here with volume-weighted moving averages. And the candlesticks, when combined on raindrop charting, the left side of the candlestick is the AM action. The right side is the PM action. So if you see volume fat, like a pregnant candlestick, at the lows of the day on the right side of the candlestick, that's a pretty bearish candlestick. Now, what happened the following day, you would have considered that, suppose we didn't have the third standard deviation Bollinger Bands up here, and we just had that candlestick up, we would have said, you know what, in all probability, we're going to go lower. But the next day, what happened is that we spiked up higher. And remember, I said earlier, it doesn't matter where we trade intraday. What matters is where we close. What happened? The next day, we gapped up higher, closed green with a fat right side of the candlestick, implying that you had a lot of volume into the close. Unlike the prior day, when you had a red candlestick, you had a lot of volume to the downside into the close, which is very bearish. You don't want to see that. If you're bullish, you want to see fat right-sided raindrop candlesticks. Now, I hope Team TrendSpider doesn't get upset with me for describing raindrop charting as such, being fat and pregnant on the right side at the end of the day. But I have a hard time keeping things simple. I easily overcomplicate things. So that's the easiest way I could do it. So bear with me. Anyway, so this is a great setup here. Big fat right-sided candlestick. On the raindrop charting, we had a 3-day sequential consolidation. The next day, we gapped up higher. What was the right side of the candlestick into the close on the 7th of June? Right side pregnant. Good stuff. Off to the races. So this is the value of raindrop charting. I don't want to spend too much time here. I'm getting very, very long with this video. So Google, we're looking to short. Probably going to be using a bear put spread, using options, of course. And that's it for tonight, folks. Don't forget, 7-day free trial offer to TrendSpider. Are you ready to join the Contrarian Trader? Please sign up now. Get TrendSpider for free. I have a 14-day free trial offer. Hope to see you in the forum. And you should be watching this on YouTube. Please smash that like button. subscribe, share with a friend. I appreciate that very much. It helps me out quite a bit. Everybody have a great night. I'll talk to you tomorrow.